Welcome to Great to Know, brought to you by Great Lakes Credit Union. Today we'd like to talk about some financial fundamentals and basic banking products. Let's begin with the difference between a bank and a credit union. A bank is a for-profit financial institution. They answer to shareholders. Credit unions like Great Lakes Credit Union are not-for-profit organizations that answer to their members who are also owners. Bank profits fuel the price of their stock. Credit union profits are put back into members' pockets through better rates on loans, higher deposit rates, and fewer fees. Banks refer to the people doing business with them as customers, while credit unions refer to them as members, reflecting the fact that they have a share of ownership in the organization. Now, let's talk about some common banking products, starting with a checking account. This is normally where your paycheck is deposited and where you pay bills from. A checking account is for day-to-day expenses and monthly bills. With it comes the convenience of online and mobile banking and a debit card. The savings account. It's an account you put money in for things you want and will need in the future. A good principle to follow with savings is to pay yourself first. That means set money aside before you pay anyone else. You'll earn interest on your savings, which is a great way to grow your nest egg. It's a good idea to have multiple savings accounts. An account can be earmarked for the holidays and vacation time. You can also have an account for emergencies. A loan is when you borrow money. This is what allows you to pay over time for the more expensive things you will need in your life. A mortgage is the loan you need to buy a home. You would normally get a loan to purchase a vehicle. Credit cards are also a type of loan. A personal loan can be good for small home improvement projects, repairs, upgrading devices, or taking that vacation. A personal loan can also be a good way to consolidate debt. This can lower your monthly payments by taking a number of loans with different interest rates and consolidating them into one new loan. Now, let's talk about your credit score and what it means. It's a fundamental part of your financial life, a very important number. There are 3 credit bureaus that issue credit scores: TransUnion, Equifax, and Experian. Your credit score is like a grade and reflects how you manage your loans and credit cards. It ranges from 300 to 850, and you always want to aim for a high score since your credit helps determine the interest rate you pay on loans. A credit report shows your history with credit. It often determines whether you get approved for a loan or not. Lenders, employers, landlords, and utility companies are among those who check credit reports. It's important to make payments on time. Paying a loan 30 days late or more gets reported to credit bureaus and will affect your credit score. Financial trouble. It can happen to the best of us. There's an old saying, if you find yourself in a hole, the first thing to do is stop digging. Stop making unnecessary purchases. Find ways to cut costs. Use credit cards responsibly. The quicker you address the issue, the sooner your situation will improve. It's always great to know. Learning the fundamentals will keep you on the road to financial freedom.